Hi my dear all friend, I am Muhammad Farhan Afzal and you watching Malek 0.28. Today I will discuss insurance. What is insurance? How many type of insurance? Property insurance, commercial insurance, car insurance, medical insurance, everything in include in this video. Today, first of all, in this video part 1, I will discuss property insurance and commercial insurance. This is include both of you in one insurance. So I will discuss this is the insurance redirect here, not be confused with insurance for other uses. See insurance. Insurance is a mean of protection from financial loss in which exchange for a fee a party agree to compensate another party in the event of certain loss, damage, or injury. It is a form of risk management primarily used to hedge against the risk of a contingent of uncertain loss. An entity which provides insurance is known as an insurer, insurance company, insurance carrier, or underwriter. A person or entity who buys insurance is known as a policyholder, while a person or entity covered under the policy called an insured. The insurance transaction involves the policy assuring a guaranteed known and relatively small losses in the form of payment to the insurer a premium in exchange for the insurer promise to compensate the insured in the event of a covered loss. The loss may or may not be financial, but it must redicable to financial term firm. Furthermore, it usually involves something in which the insured has an insurable interest established by ownership, possession, or pre-existing relationship. The issuer receive a contract called the insurance policy, which detail the condition and circumstances under which the insurer will compensate the insured or their beneficiary or assignee. The amount of money charged by the insurer to the policyholder for the coverage set forth in the insurance policy is called the premium. If the insured experiences a loss which is potentially covered by the insurance policy, the insured experience a loss which is potentially covered by the insurance policy, the insured the insured experience as loss which is potentially covered by the insurance policy. The insured submits a claim a loss which is potentially covered by the insurance policy. The insured submits a claim. Insurance processing by a claim adjuster a mandatory out of pocket expense required by an insurance policy before an insurer will pay a claim is called deductible, or if required by a health insurance policy copayment, the insurer may hedge its own risk by taking out Renault Insurance Variable and other insurance company agree to carry some of the risk, especially if the primary insurer deems the risk too large for it to carry for it to carry for it to carry for it to carry processing claim and for it to carry some of the risk, especially the primary insurer indeed. Early method of transferring or distributing risk were practiced a Babylonian, Chinese and Indian trader as long ago as the third and second millennia BC respectively. Chinese merchant traveling teachers river rapid would redistribute their ware across many vessels to limit the loss due to any single vessel capsizing. The law of general average is the fundamental principle that underlies all insurance. In 1816, an archaeological exhibition Minya, Egypt produced narrow concept of insurance has been also found in 3rd century BC Hindu scriptures such as Dharmashta, Arashta, Monashta, Mirti. Ancient Greek had marine loans. Money was advanced on a ship, a cargo to be repaid with large interest if the voyage prospers. However, the money would not be repaid at all if ship were lost, thus making the rate of interest high enough to pay for not only for the use of the capital but name of bottomary and respondentia bonds. The direct insurance of sea risk for a premium paid independently of loans began in Belgium about 1300 AD. Separate insurance contractor insurance policies not bundled with loans or other kind of contractor were invented in Genoa in the 14th century, as were insurance policy-backed views. Modern method insurance become far more specialized in enlightenment area Europe, where vertical development property insurance as we know it today can be traced to the Great Fire of London, which in 1666 devoured more than 13,000 houses. The devastating effect of the fire converted the development of insurance from a matter of convenience into one urgency. A change of opinion reflected in such scripture when inclusion of a site for the insurance offices in has new plan for London in 1667. A number of attempt fire insurance schemes came to nothing, but in 1681 economists Nicholas Bourbon and Alvin Ali, one associate established the first fire insurance company. The insurance office of house at the back of the Royal Exchange to ensure break and fame home. Italy 5,000 home were insured by his insurance. At the same time, the first insurance schemes for the under of the home available by the end of the 17th